the biggest trades of 2025. Hi, it's Charlie giving you today's video. So we're going to look at the dollar here. So going into 2025, I'm recording this latest November. So let's actually have a technical look of the dollar and where we're at, where we may go to, and the things to look out for. Now, the thing that just technically happened this week was the dollar finally, after essentially getting stuck in a range over this last 2 years, has now broken the range. So, of course, you're always going to get sellers coming in, just as markets break out of ranges and stuff. But this is still technically something that's quite significant, that the dollar, having peaked back in 2022 and then the big pullback that we had, and then really it's been on a knife edge in a way that the dollar could have so easy just 6-7 weeks ago could have looked like it was about to break down. It got down to 100 area, and then we've just had this monster turnaround in the dollar index. So at this stage, until proven otherwise, the dollar run is to the upside. Technically, we've now broken to the upside of this entire range, so that's the side that many technical traders will be looking at, myself included. So, what with this development, what do we want to look at? Well, firstly, let's go out to... Well, we can see this on the weekly chart. Yes, we've had a monstrous run on the weekly time frame. So let's go and have a look at the daily time frame before we come out to higher time frames. I've got two moving averages on my chart here, just a 50 period moving average and a 200. So the 50 looks like it is going to be crossing up through the 200, producing a golden cross, coming up most likely this coming week. Does that mean much? No, not overly. It's just a traditional indicator of a bullish move. It's just the moving averages, medium-term moving averages, confirming what price has done. So what's much more important right now is the fact that, firstly, the dollar has broken out. And for many traders, they're going to be looking at this and saying, well, if I wanted to buy, where would you be looking to buy? So the dollar index had this relatively shallow pullback, first of all. If I just earlier this past week, a relatively shallow pullback, and it's already gone. So it's now just broken out. So where are the levels now for the dollar to pull back into? Well, it's still got this 106.50 zone, which comes into these prior price levels here from the April low. So anywhere in that zone there, of course it could pull back further than that. We'll have the moving average itself coming in as an element of support as well. But of course I can also put a fib retracement on, as this is a very nice straight forward run here. The 38% retracement comes right way down at just above 105, so it's quite a distance away. So essentially, sometimes when you've got a market which has had a really strong run, trying to pinpoint an exact level where it may pull back to is actually quite difficult, because is it going to do a shallow pullback like it just did at the beginning of this week? Does it chop sideways, or does it do a more material pullback? And these are the challenges when you're looking at a market trying to get it and you want to get in, you're just waiting for some kind of pullback. So one way to overcome that is to look at some levels. Now, I've already identified just here this 106.50 zone, and of course there's going to be some other levels as well coming into play, 100 pips south of that. So what you can do is, by using position sizing, is to say, right, rather than saying, right, I'm going to just wait for this level here, but then it never pulls back to that level, it does a shallower pullback and then off it goes again. You have to ask yourself, what do you want from a trade? What's your risk to reward? And we'll talk about that in just a moment. So providing the risk to reward is okay, you can afford to get in on a shallower retracement, but you can split your entries via position sizing. So go in with, like here, you might be going in with a smaller position here, so I don't know, whatever, a third of your what your full size position is, but giving it a wider berth as far as your stop loss is concerned. So, and I'm just making this up down here, but let's say, yeah, so that's a 200 pip stop loss, I know, but you know the market has had a big run. But then you would also be looking at these other levels as price comes down and saying, right, I'll have a third here, you know, probably with the same sort of stop, and then a third here again with a stop somewhere down here. So then, yeah, your first entry, it's got a wider stop. Your second entry, the stop is a little bit lower, and so on and so forth. So then you accumulate a position. If it doesn't come down to that third entry, fine, at least you've got an entry in here. And if it starts to run away, you can then look at other entries as price starts to trend. So that's one way of looking at it, by just downsizing your positioning, having a wider initial stop on your first entry, and then looking for those secondary and tertiary entries to come in. Now, of course, like I've said, you could wait and just say, well, I'm just going to wait for a larger retracement, but there's always the scope that that doesn't happen. And so I'm talking about, like I've titled this, the trade of 2025. Well, let's have a look at that. We've just technically broken out here. I've got my trend lines and channels on. So if we take this out to a monthly chart, you can see this rising channel that the dollar index is in. So there's absolutely nothing to say that the dollar index, now that we've broken technically back up to the upside, like I've already said, just 7 weeks ago, it was looking the opposite, like it may be looking to break down. But this is where we're at now. And the scope, there's a lot of clear air here to come up and retest the highs up into the 112 to 114 zone for the dollar. So, and that's still 500 pips north as a minimum of where we currently are. So when you start looking at your stop losses, then if you're looking at decent risk rewards, then there's plenty of scope there. I've now just taken this out to a quarterly chart as well, so you can really get a sense of perspective here. And you can still see that nice rising channel. And so if we are going to push higher, then there's nothing to say, yes, we're going to have a technical level here. But who's to say we couldn't end up coming up to the rising channel line again at some point, and that could then come in with these highs from way back in 2001 as well. We do have a backdrop for a big move in the dollar, whether it is to the upside or this is a false move and we come crashing back down. Whatever way I look at it, we do have the ingredients there. What with Trump coming in to become the new president again, and with the policies and the geopolitical backdrop that's going on globally, certainly the scope for a large dollar move, one way or another, is there. Right now, what we do as technicians is we take the available information and we make decisions based on how we analyze a market. And so how I'm looking at this right now is, well, the dollar has broken to the upside of a 2-year overall range. So therefore, that's telling us something. The market's trying to tell us something at the moment. Until proven otherwise, we're back in with the trend moving back to the upside. We've done this pullback into 2023 when we made the lows there. Then we made that high. We hadn't surpassed that high, and it almost looked like we were going to come down and make a new lower low. But no, we've technically now done our pullback. So this technically is the last higher low. And then this high here, we've now resumed back to the upside by taking that out. So coming back to this, whether we're looking at the daily chart or whether we're looking at a weekly chart, it's just a case of picking some levels. And like I said, that's how my approach to the market is, to pick levels and then start to just put little increments in based on that analysis, because we have had a significant run. There's nothing to say that we couldn't have a decent retracement, but you have to pick some levels, and there's always the scope that we don't get a significant retracement. Finally, if I just come back to a really interesting move that the dollar had, I'll go on the weekly chart here, back in 2014, for example. Look at that run that we had. There were very shallow retracements through that run. So sometimes a market just runs, and we've seen examples of that over the past couple of years with some of the yen pairs. Dollar yen at times just does not look back. So there's not always going to be a significant retracement when we start looking out at this. So pick your levels as a trader, and don't always think it's got to come deeper down. A way of overcoming that is to put a smaller position size in, slightly higher up, so not looking for as deep a retracement. If the market then starts turning back up, then you can start to then build the position as well, on future breakouts or whatever. So that's just a little tip there, so to speak, for entering positions. Just split them up into small positions, and some of the positions will have a wider stop against them, and others will have a narrower stop against them. Giving, so if we do get a retracement, great, a larger retracement. But if not, at least you are in on what could be quite a significant move there. So, and of course, I'm just picking the dollar index. You can use that against the dollar itself, against to trade against whatever currency, individual currency you prefer, whether you're looking at any of the major currency pairs there. Anyway, that's food for thought this Saturday. I'd already got the thumbnail ready for this, thinking I'll be recording this in maybe a couple of weeks time, not expecting the dollar to break out quite as quickly as we had, and so after yesterday's move. So there we go. Enjoy your weekends. I'll be back in touch next week.